Hey everybody, this is Dr. Tom Carr, aka Dr. Stocks of drstocks.com. That's drstoxx.com. So, I'm going to go over today how to use the MarketSmith software to find the market's hottest stocks. I'm going to create a scan in the software. I'll run the scan for you. I'll give you my top 3 picks, let's say, for this coming market. Now, if you're watching this 6-8 months down the road, you're a bit late, but you can always use MarketSmith software to create the same scan that I'm going to show you today. Before we get there, let me just introduce you to what I do. So I've been trading the market since 1998 and have been publishing daily, weekly, and monthly newsletters through our site drstocks.com, drstoxx.com. I serve over 18,000 clients all around the world. We have subscriptions, we have trading system manuals, we have how to trade webinars, and I also do some private coaching. You'll follow me if you want on drstocks.com and Facebook, and then we also have a large following on StockTwits with a live trading room, the Dr. Stocks trading room. You can join me there to watch me trade the markets live each day. And I'm also found on LinkedIn. All right, let's get over to MarketSmith. Now, MarketSmith is a product of Investors Business Daily, and you may be familiar with that periodical, or you might be familiar with some of the proprietary products that they market on investors.com. But MarketSmith is a scanning and charting tool that I have been using for years. In fact, I like it so much that I am a sponsor of the product. So I use it day in and day out to find great looking trades for our newsletters. We publish the Trend Trade Letter, the ETF Trend Letter, and my most profitable letter, the weekly Momentum Letter. Top 3 momentum hot stocks each week, the top 3 conservative hot stocks each week, and the top 3 aggressive momentum stocks to sell short. That actually has been the most profitable part of our letter there, that short system. Okay, so I've got a bunch of scanners already programmed into the software. I'm not going to use any of these. I'm going to do one brand new for you. So let's open up the screen, start a new stock screen, and let's just give this a name. I don't know, let's call this the Yahoo scanner. It's nothing to do with the company. I'm just saying whenever we find a good hot stock, I yell Yahoo. Okay, so there are a whole bunch of filters that you can program in to MarketSmith to find the best stocks, and I'm going to give you a few tips here on how I usually do that. So I start over here with a Smart Select rating. You'll find a number of the proprietary ratings that you can only find in Investors Business Daily. You can only find them in the MarketSmith software. And I'm going to show you a few here that I use on nearly every one of my screens. I'm going to start with relative strength rating, and I'm going to put in a minimum here. Well, let's start at 75. Okay, 75 on a scale of 1 to 99. The relative strength rating has nothing to do with the relative strength index, which is a pretty common indicator that people put on their charts. No, the relative strength index here means how the price performance has been performing relative to the overall market. When we say a minimum here of 75, then we want the stocks that we are scanning to be in the top 25% of all stocks on the basis of relative strength, okay? Next one I'm going to put in is SMR. Now, SMR stands for 3 things: sales growth, margins, both wide margins and increasing margins over time, and the R stands for return on equity. Taken together, these 3 give the companies that pass through the filters a strong moat. You probably know from Warren Buffett's work on stock investing that the companies he likes to invest in have a strong moat. That is to say, they don't have a whole lot of competition. They have a unique product line. They've got strong pricing power. Pricing power is a function of sales growth and increasing margins. So if you've got good ratings here in those 2, then you've got a pretty good moat. the return on equity is really a function of the competency of the management of the firm. Are they using the equity in the firm wisely and well? And if they're getting a good return on the equity of the company, then they will have a high rating here for the R value. So again, pricing power and moat. I'm going to put in A and B. It's a little sluggish here, but let's put in B and A. Okay. So we now have whittled our large universe of stocks, 9,400 stocks, all the way down to 840, but we still have some more work to do. The last thing I'm going to do on this page is the comp rating. So the comp rating is kind of the overall picture of the stock. It takes into account price performance, earnings growth, sales growth, margins, and a whole variety of other things. And it gives out a single number between 1 and 99. I'm going to put in a minimum here of 85. So that's a good high comp. That means that the companies that we're screening through our filter here are very sound fundamentally, with lots of good growth, and even some decent valuations. The earnings estimates are rising and so on. All right, I'm going to go over here to price and volume. I want to make sure that we are trading stocks that have a reasonably high price. I don't want any penny stocks. I don't want any stocks trading under $10 a share. We're in a market right now where most of the indexes are up near all-time highs. So I'm raising my price, my minimum price, to $40 per share. Usually when I run this scan, I'll do it at more like $20 per share, but let's start with 40. Next thing on this page is the average daily volume over the past 50 days. I'm going to put in, let's put in 1,000. So that means the average daily volume for the stocks that pass through this filter is 1 million shares per day. So that it's going to rule out a lot of the small float stocks, some of the under the radar stocks, the stocks that aren't really traded very much by the big funds. We don't really want those stocks if we're looking for the hottest stocks in the market right now. Those tend to be stocks that have great vulnerability to the downside. We don't want that. So we want stocks that are marquee names in the market. You know, your Apple, your Microsoft, your Nvidia, and so on. All right, so we're down to 130. That's a good place to be right now. We can always fiddle with some of these numbers if we don't get enough stocks passing through, but we're good to go for just now. The last thing I'm going to put in, I'm going to go up to the earnings tab here, and I am going to scroll down to estimates. Estimates, where is it? There it is. Okay, so if you're familiar with the research work done by Len Zaks, he is the founder of Zaks Investment Research. I highly recommend his work. He did his PhD, his finance PhD at MIT University, and in his doctoral dissertation, he studied the question he raised rather was, what is the one fundamental metric that is most correlated, has the strongest correlation to near-term forward price performance? So what is the one fundamental? Was it the price to sales ratio? Was it the price to earnings ratio? Was it the long-term debt or the quick ratio? Was it sales growth? Was it earnings growth? No, it really wasn't any of that. The one thing that had the greatest or the strongest correlation to forward price momentum over the next quarter, right, just looking at one quarter, was the earnings estimate revision to the upside. The earnings estimate revision, whether it comes from the company itself, whether it comes from an analyst covering the company, doesn't matter. It is a revision upward of what the company is expected to earn at the next earnings announcement. Okay? So there are several ways we can do this. We can do this for the current year. We can do it for the next quarter. We can do it for the following year after that. The one that I like to use is right here, the current year. So I'm going to put in a minimum, let's try 5%. Let's see if a 5% increase in earnings estimates, how many companies does that leave us? Only 116. So let's make this 15%. What happens when we go to 15%? Down to 104. Let's go to 25. Where does that take us? 73. Okay, so I'm going to leave it right there. I'm going to go back up to my Smart Select ratings. I'm going to increase my relative strength to 85. Let's try that. I'm trying to get down to around 40 stocks. We're at 64. Okay, let me move up my comp rating to 90. Let's see where that leaves us here. 59. Okay, well, let's take the relative strength then on up to 90. Where does that go? 44. Perfect. Okay. So we've got 44 stocks. These are the hottest stocks trading in the market right now per all of those filters that I just put in. And we've got the list of them right down here. So they are populated immediately as the screen results are tabulated in. The list down at the bottom will populate with only the stocks that pass through all those filters. So I've got a lot of stocks here. I obviously am not interested in all of them. I could sort these in a variety of ways. I could rank them by price. I can rank them by how much they're gaining or losing today. I could rank them by EPS rating, relative strength rating, the SMR. They're all A's and B's, so we're not going to worry about that. Let's rank them by comp, because that's kind of the overall big picture, right? We're looking for, all these stocks, by the way, are above 90, but let's bring the 99s up to the top of the list. Well, looky here, AMD, one of my favorite tech stocks, one of the best semiconductor stocks that is out there these days. It even has better fundamentals than NVIDIA. And we can see that AMD broke out to all-time highs a few weeks ago, pulled back into the 50-period moving average, rallied back up, not quite as high as the previous high, and now we're rallying back down to support. So really, this is not a bad place to buy some shares of AMD. Everything over here, of course, is going to be very good. We have this increase in earnings estimates, and we've got an EPS of 99. It doesn't get any better than that. SMR of A, comp rating of 99. Doesn't get any better than that. The timeliness rating is the rating of MarketSmith per technical analysis. So that's giving us an A. So I'm going to write down AMD as one of our 3 stocks recommended from this video. We don't want to buy it right here. We want to make sure that this little downtrend is done, right? We don't want to buy it now and have it keep pulling back, pulling back, pulling back. We want to see it start to travel back up again to test these highs here, and then the all-time high, and then a breakout. So I'll be interested if it can get back to, let's say, 138.50. I'm going to write that down. I can put in a buy stop order at 138.50 if I wanted to. Anyway, that's on my list. Builder's First Source. This is the one that we actually did a little shorting of a couple of days ago. Had a nice little gain, just a day trade, because it got a little too high, right? A little too far, too fast. And so I'm not interested in this one as a long. This is going to have to come down a little closer to the 50-period moving average for me to take some of that risk out of the trade. CF Industries, which is a chemical plays, and a lot of the chemical stocks have been doing very well this year. So this is not bad, right? All-time high way up here. Nice little pullback to the rising 20-period moving average with a reversal candle today. The fundamentals over here look perfect. These 2 triangles, by the way, I call that eye candy. When I see 2 triangles and when I see both of these numbers blue, which means that estimates are going up relative to the previous year, it just doesn't get any better than that. Okay, so I'm interested in CF. Let's see where the high of today is, 69.78. So I'm going to write in a price of 69.80 for CF. And if it trades at that price, I'll be interested in buying it. I'm not going to look at CLAC because that's another semiconductor. We already have AMD on our list. Let's Marvell Technology, same. How about Nucor? There's NVIDIA, by the way. It's down at number 9. One of my favorite, probably my second favorite in the semiconductor space. But let's try Nucor because that gives us a little bit of diversification, right? This is a steel play. And the industrials have been doing very well in recent trade. The Dow Jones industrials are up at all-time highs, although a little bit off today. And yeah, I like this chart because here's what MarketSmith is showing me. Do you see how it's printing in this green rounded bottom with a little bit of a lip here, it's trying to tell me that there is a cup and handle formation that's forming. Right, here's your big cup, big wide cup, not very deep, but very wide. And the handle is also quite wide. And it looks like yesterday it was starting to break out of this. If it had broken out and held the breakout level, the breakout highs, then we would see this green underline here complete, showing us a confirmed cup and handle breakout. But this little reversal today is kind of upsetting that plan. But I like this. I actually really like this. So 128.80 is the beginning of the cup. And this is, if you were to draw a line over here, it would be sort of a line slightly downtrending. Yesterday was clearly the breakout. Today, a bit of a give back. Let's see what the high today is. Today's high is 123.96. So I'm going to say 124. If the stock hits 124 sometime in the next couple of days, I'm going to be buying shares of Nucor. All right, guys, that's it for today. You saw how to create a scan to find the market's hottest stocks. You saw a little bit of the chart process that I use to determine the best of the best. And you've got a couple of trade ideas. If you're watching this in a timely fashion, maybe you can catch on to some of those. If not, join me over at drstocks.com or on stocktwits.com in the Dr. Stocks trading room, so you can watch me trade live there. God bless everybody. See you soon. Bye now.